I'm rigid on certain things, but you also need to learn to be quite flexible on other levels. I don't care whether you trade the Dow or not. You're looking for signs that something has changed in the market. When people get less decisive, we tend to get bigger moves. When you yourself are feeling emotional about the market, it's best to take a deep breath and step away. I have a button that says if it looks great, it's too late. I wait for my indicators to turn up or down. Up at the highs, everybody's bullish on energy. As we've moved down, not so much. Sentiment on its own is no reason to be bearish or bullish. Most people will come out and say, you don't want to break 5,000. And I'm like, no, I want to break 5,000 because I want to see what's down there. I want to see if there's really going to be selling that accelerates, or does the selling dry up because everybody's anticipated it and they've already sold.
All right, welcome back everybody to the TraderLion podcast powered by DeepView. I'm your host, Richard Moglen, and joining us today is someone who I'm really excited to talk with, Helen Meisler, who is a contributor at thestreetpro.com. She's previously at Goldman Sachs, Cohen, and is an extremely experienced trader and technical analyst. Helen, thank you so much for joining me today, and really looking forward to this.
Thanks for having me.
Yeah, of course, my pleasure. And to kind of set the stage, I always like to bring it back to people's backgrounds. And I'd love to hear about how you first got into this industry, some lessons learned in your early days, I'm sure. But yeah, bring me all the way back to how you first got interested in the markets and got started.
Well, let's see. I started in 1982, which was the bottom of the great bull market after having been in a bear market for about a decade. And I went to work on Wall Street because they were the only place hiring. Honestly, I'd started out, I got my degree in marketing. And so I went to work in marketing research, and it wasn't as stimulating as I thought it would be. And I went to a headhunter thinking, well, maybe I should transition to advertising or something like that. And she said, no, you should go to Wall Street. Said, oh gosh, no way. I'm not, I think I cheated my way through finance. And she said, no, look, I've got a stack of jobs here. They're willing to take you on. And anyway, so I needed some interview experience. I got hired by, it's not Cohen, it's Cowen.
Yep.
And that was it. I learned on the job. And so my first job was to be an assistant to the partner in charge of the institutional division, institutional sales, I guess, at Cowen in New York. And it just, the market had been dead for 10 years. And so it was one of these things where he just kept getting busier and the markets kept getting busier, and he would keep dumping stuff on my desk. And honestly, that's just how I learned. And then in, I think it was 1984. So that was in 82. So I think it was in 84. We hired a market technician, Justin Mamis. And I just, I used to sit in the morning meetings and listen to him. And I just thought, oh God, what he does sounds so interesting. So I asked if I could work with Justin. And I mean, Cowen was just great back then. And, it was a small partnership. And they said, sure. So I started working with Justin. And that's how I learned what I do. And have I learned anything? I probably not much. But no, I mean, how do I explain this? I think a lot of what I learned, I still use, but markets evolve and markets change over time. And I think one thing is I'm rigid on certain things, but you also need to learn to be quite flexible on other levels. And I think when you are not flexible, you sort of get boxed into a certain viewpoint, which can hurt you and obviously hurt your trading.
Yeah, for sure. And when you first started working with Justin, what was that kind of learning curve like? Because I assume, not having worked with charts before, it's quite an adjustment. And obviously, and a big part of what I wanted to talk with you today is, handwritten charts and creating those. So I'd love to hear about, those first few weeks, your first few years learning under him and kind of getting used to that process.
Okay, so back then, we got our quotes from what was called a Quotron machine. it, it wasn't even a QWERTY keyboard. It was A, B, C, D, E, F,
Yeah.
and all you could do was get a quote. You couldn't even get news recall. Okay, I mean, honestly, to go read a story on IBM, you had to get up from your desk, walk down the hall to the Dow Jones ticker machine, which printed out on real paper, like a toilet paper roll, the news, and you'd have to go find the story, cut it, Xerox it, go tape it back. I mean, it was a whole process. And so we didn't have charts on screens. You just didn't. You got printed charts every week we got them from Daily Graphs back then.
Yep.
And which was William O'Neill's deal before he started Investors Business Daily. And so you either had to take those daily charts, those daily graphs, and you can update every day what the stocks had done between Monday and Friday in order to keep up with it, or you just sort of imagined it.
Right.
But what Justin did, which then I did, was we used hand-drawn charts like this.
Very nice.
And you plugged in the high, the low, and the close, and the volume every day. And you had to wait 20 minutes after the market closed because you had to wait for everything to settle. So my first day of work, Justin gave me a stack of charts. I don't know, maybe, I don't even know, maybe 200 were in there or something like that. And the charts are on log scale, semi-log scale. So first of all, I had to figure out logs. And then I had to, we didn't trade in decimals then, we traded in fractions. So you had to know your fractions. And you'd put the pencil to the paper and you do high, low, close. And it took a long time. The market closed at 4 o'clock and I was still sitting there at 8 o'clock putting the pencil to the paper. And I thought, oh my God, Justin is so old. And he was maybe, I don't know, I'm 55-ish back then, which is younger than I am now. And I thought, oh God, there has to be a way that we can computerize this. This is ridiculous. So the next day, I said to Justin, this is stupid. We really need to computerize this. Can you imagine? You can only imagine because people tell me today, there's a way to computerize this. And I think, oh my God, I've been there. And Justin said, no, there's not only a feeling you get from putting a pencil to the paper, but there's a feeling from sharpening the pencil. I'm sure I was, 24 years old, I guess, and I did an eye roll and I went about doing it. And he's right. Many years later, so that was the early 80s, in 1996, my husband and I moved to Asia. My husband got transferred and we moved to Asia. And so I quit my job and off I went. And I thought, well, now we have the internet. Sure, it was dial up, but you could get some charts online. And I was just going to be trading for myself. And I thought, I'll just use online charts. Oh my God. It took me, I think, about a month before I felt like I didn't know what was going on in the market and I had no feel. And I went back and I updated all my charts for that month. It took forever. But I've been doing it every day since. And, the whole time I was screaming, oh, Justin was right. Justin was right. So I've learned that lesson. It's part of, for me, it's just part of the ritual of what I do at the end of every trading day.
Yeah. And that actually kind of reminds me of one of the first books I read on the market was Nicholas Darvis, How I Made 2 Million in the Market. And he, of course, had his process with telegrams and he would hand chart as well. And in the book, for everybody who isn't familiar, he actually talks about, he traveled all over the world dancing using the telegrams. But when he actually moved back to New York, got closer to the markets, started calling his broker every day, changing his process, he lost that feel, just like you were discussing. And it's not until he went back, took a step back from all the noise that can be involved with New York, that's when he regained his feel and kind of got his perception back, just as you were describing. So that's super cool. And I wanted to ask you, when you first started with Justin, were there any books or recommended reading that he gave you, or was it just learning from him directly?
he gave me what he always called the McGee book, but it was
Yep.
Edwards and McGee,
Yeah.
which is technical analysis of stock trends. It had been written in the 50s, and he read it, and that's how he started charting and getting into it. And he just felt like I should read it, so I did. It's quite a book if you don't know it. I'd call it not an easy read.
Yeah.
It's a textbook basically, and not even at that an easy textbook to read. But I now have 2 copies. To this day, I still refer to the book often. And to me, I call it the Bible. So
Yeah.
that's it. That was it. That
Yeah.
was it. Have I read any other books? Yes, but not many.
Yeah. And could you talk to me a little bit about how, developing your feel using those handwritten charts and how you feel that helps you? We were talking just before we start recording about whether stocks are moving off the page, down the page, and that tells you a little bit about the market. I imagine there's also difficulties like Nvidia just announced the stock split, so I wonder how that impacts things. So yeah, could you let me a little bit more into your process of handwriting those charts and how that helps build that feel?
Well, without getting too technical, the from the center scale on that chart,
Hmm.
okay, to go off the top of the chart, a stock has to double.
Hmm.
For it to go off the bottom, it has to halve. So during the life of the market, most stocks will, I mean, that's a wide range.
Yeah.
Okay. And most stocks will go in between. But when you get into a true bull move or a true bear move, or I should say close to the end of a big bull move,
Hmm.
a wild bull move, or a bear move, I will have tens of stocks that will go off the top or off the bottom. I've not had that. I've just not had that. I mean, if you go back, let's just say to my Twitter feed in March of 2020, you're going to see me tweeting about how many stocks are going off the bottom of the page day after day after day after day after day. And eventually you start to see fewer and fewer stocks are going off the bottom of the page because
Right.
the selling is finishing. So you get a little feel for it that way. But here's another funny Justin story is that early on, I think the stock was Boeing, but I can't remember for sure. Boeing was getting to the top of the page. And so I cut and pasted it because that's what you have to do. You have to, I mean, you take a look behind me. That is, I think it's Peloton.
Hmm.
Yeah, that's Peloton. So you can see how I had to keep cutting and pasting and
Yep.
taping and okay. So the stock got pretty close to the top of the page, let's say within a few bucks. And I thought, well, I'm going to be proactive and I'm going to cut and paste and add on the chart and and he came into work the next day and he said to me, "What did you do to Boeing?" I said, "Well, I cut and pasted it. I was anticipating." He said, "Now you just spoiled it. The stock is never going off the top. You cannot anticipate. You must wait for it to go off the top." Again, I'm sure I rolled, but he's right. When you
Yep.
anticipate a stock going off the top, it's like you put the kibosh, it's like the stock knows that you put the kibosh on it. So I wait, and sometimes I don't. And I can tell you, let me see if I can find the chart, but I don't know if you can see,
Hmm.
but I had a cut and paste here.
Hmm.
Okay. And I did it in advance. Look at the stock. This is a bull market, right? We're in a bull market. This stock popped and died.
Right.
Shopify. And I killed it. Single-handedly, I killed it. Because I cut and pasted it 2 days before it went off the top.
Yep.
I can't tell you why, but it's a thing. It's like the stock knows. I know. Now all your watchers and listeners are going to be like, "Oh God, she's weird."
No,
Anyway,
I think it's fascinating. And how many charts do you track on a daily basis, and how long does it kind of take you to update that every single day?
well, I've never honestly, I don't really tend to count, but call it 150 to 200,
Hmm.
and it takes me about 45 minutes.
That's pretty quick.
I mean, I
Impressive.
know the scales by heart now,
Right.
you know. I mean, it was a little bit of a challenge when we moved from decimals, from fractions to decimals, because you had to start doing the math differently, but
Right.
that's just it. And sometimes I do my math wrong, and weeks later I catch it and I've got to go back and recharge.
Ugh.
Anyway,
Yeah.
but so is there a feeling? Yes, I have a notebook. It's actually a steno pad. If they ever stop making steno pads, I'm really in trouble. But it's a steno pad, and I
Mhm.
start every night with a clean slate. I do my charts alphabetically, so I don't put all my technology stocks together. I don't put all the drugs together, because I want to really have a clear head when I do this.
Right.
And if the pencil feels positive, I write it down on the left side. If the pencil feels negative, I write it down on the right side. And if it feels extremely one way or the other, I give it a little check mark so that I'm not looking. But what I do at the end of the chart session is I look and I sometimes say, oh my God, look at all the retailers that are on this list, or look at all the drugs that are on this list. And then I'll start going through, because I obviously I do a representative sample. I can't do all of them. And then I'll sit down and go on the computer and go through an entire list of drug stocks, an entire list of retail stocks, and that's how you get a better sense of what's going on. Is it just happens to be the stocks in my pile, or is it the stocks, in general, a whole group move?
Yeah, for sure.
So yeah.
And have you noticed any trends recently that are of note? Just for everybody's context, watching this, we're recording this on Thursday the 23rd, so we'll see what happens later on. But Helene, are there any kind of group moves that you're watching right now that have just started, or some group moves that have been happening for quite some time that look to be, waning and weakening?
Yeah, let's say about a week or so ago. So I know this is going to sound ridiculous because Nvidia just is flying now, but about a week or so ago, well before this last move here up in Nvidia, the semiconductor stock started to feel better. I don't know how they're going to feel tonight, but they started to feel better. In my newsletter, I recommended AMD. I'd been recommending analog devices and Nvidia,
Hmm.
and even Intel. Oh my God, even Intel. I've noticed, I wrote about this last weekend. This is a little sidebar here, but
Hmm.
I've noticed that software ETF, IGV,
Hmm.
actually has tended to lead the semiconductors
Mm.
by approximately a month in a weird fashion. So, for example, over the last year, the IGV topped out in July, and then there was a little pullback, and we had another run into early August.
Hmm.
And in early August, it made a lower high. But
Hmm.
if you look at the SOX, I don't use the SMH, I use the SOX only because
Hmm.
my data is all on the SOX, because I'm old and we had the SOX before we had the SMH. And if you look at the SOX came all the way up to the old high. So if you're just watching the SOX, you might have missed the fact that software was already fading.
Hmm.
Okay, and then obviously we had the big correction. Now, if you move fast forward to October, you can take a look at the IGV, never even got close to the high from the previous fall, the previous spring.
Hmm.
And as a matter of fact, it broke just like a smidge and snapped right back, like from all those lows.
Hmm.
The SOX came all the way down to the previous low of the spring. So again, the IGV was telling you things were not as bad as the SOX was looking. Now you fast forward to early this year, the IGV made a high in February. The SOX didn't make its high until March. So I am now that everybody's gaga over semis, and quite frankly, I don't dislike the semis here, but now that everybody's gaga over them, I'm watching the IGV,
Right.
because if IGV can't make a higher high, my guess is within a month, the semis are done. At some point, that relationship will change, I'm sure. But to me, I've noticed that it's an interesting relationship, and that's what I'm watching.
Yeah, and are you someone who likes to play the turns more than kind of a trend, an extended trend? What's kind
Oh
of
God,
your
I'm the
trading
worst
style?
trend trader ever,
Mm.
ever.
Mhm.
I'm always looking for a turn.
Mhm.
Always. As soon as we start going down, it's a terrible trade. As soon as we start going down, I start thinking, okay, when are we going to get oversold? When are things going to start to look like they're bottoming? Rather than just play the downside. And as soon as we rally, I start thinking, okay, how long can this last? And yeah, it's just don't do that. Learn from me. Don't do that.
What do you think it is about kind of your makeup that kind of leads
I'm a
you to that
contrarian.
style? Hmm.
I'm a contrarian. And so that's why I'm a terrible trend trader. I keep trying to be one, not very good.
And are there any particular patterns that you like to look for? I mean, obviously, you just pointed out kind of undercuts and it was, some symbols that didn't undercut. What kind of patterns do you like to trade that kind of let you know about that turn is coming and the potential start of a new trend?
Okay, in terms of individual stock charts, I give leeway to
Hmm.
lower lows. I'm a big fan on the indexes, especially. I'm a big fan of taking out a level.
Hmm.
And I often use the expression, I just want to see what's up there. I want to see what's down there. And you want to see how much. So for example, if you're looking at, I don't know, pick a number, 5,000 on the S&P, and you get close to it, and everybody's watching it. And most people will come out and say, you don't want to break 5,000. And I'm like, no, I want to break 5,000 because I want to see what's down there. I
Hmm.
want to see if there's really going to be selling that accelerates, or does the selling dry up because everybody's anticipated it and they've already sold.
Right.
And I feel the same way on the upside. Um, if everybody's watching a certain level on the upside and we break out and nothing confirms it, like again, if the SOX goes up and everybody gets excited, but IGV starts rolling over, not good. So that's what I look for in terms of individual stocks and groups.
Hmm.
But I use indicators to back up the fact
Hmm.
as opposed to just my feeling on it. So for example, let's say you get down to, and I'm just picking 5,000, could be 4,000, could be 6,000, doesn't really matter. You get down to 5,000 and the number of stocks making new lows has been expanding.
Right.
Okay, which is the current case. The number of stocks making new lows has been expanding for about a week or so now. So much so that the 10-day moving average has turned up, which is not good when you're at the highs. You don't want to see that. And that means there's been a lot more selling underneath than you think. And so what I look for on that break of 5,000, let's say we've been clocking in at, I don't know, 200 new lows.
Right.
And you break 5,000 and you only get 150 stocks making new lows. The selling is really dried up because there was a lot of selling in anticipation of breaking. And that to me is a positive divergence.
Mm.
Okay, so let's go back to today's world, today's market. I'm going to just look at my notebook here.
Sure. No worries.
Last week on the 15th, the New York Stock Exchange had 286 new highs. And that was the first day we got to 5308, the new high over 5,300. And since then, we got up to 5321. We've gotten back to 5308. Yesterday, we closed at 5307. I know, this is how I live. And there were only 117 stocks making new highs.
Hmm.
Even on the day that we got up there to 5321, we had 240. So in other words, I'm already tailing off. Picture a chart of new highs. It's going down.
Right.
Okay. New lows on the day that we first made the high were 12. Yesterday, there were 47. Okay. Now I'll give you NASDAQ because, everybody's gaga over NASDAQ. Last week, 292 new highs. Today, Well, yesterday, 124. Last week, 77 new lows. Yesterday, 109. So you know, just picture one is the lows are doing this, and the highs are doing this.
Right.
Don't want to see that when you're at the highs. And so I view that as a negative. It tells me, so to put it in terms that people can understand, it tells me the buying is waning.
Mm-hmm.
People are not willing to chase stocks up. People are not willing to spread out and buy. I mean, everybody's talking the broadening. Broadening is great. Broadening is not great if you're not making new highs. And right now you're not making new highs. So that's what I look for.
And with
And
that,
my charts
sorry.
will usually, I mean, I joke that I had a feel with the pencil, but it is sometimes it's just the pencil feels right. I can't tell you why.
Yeah, I was going to ask you, like with watching those new highs and new lows, do you wait for price confirmation, looking at your charts themselves, to kind of
No,
confirm what you're seeing? Okay.
I have no problem. I wait for my indicators to turn up or down. That's
Hmm.
it. I have people think I have a bearish bias. I really don't. I just have a contrarian bias.
Hmm.
And because the market generally goes up most of the time, it feels like I have a bearish bias, but I don't. Because as soon as the market, you know, you go back and you look at what I was saying in late April, I was looking for a low, looking for a low, looking for a low. I mean, you may think that's bearish, but it's not. That's me looking for a turn
Right.
because we were so grossly oversold. But in the last couple of weeks, we've gotten very overbought, and stocks are acting like they're overbought. They're coming down. So
And I want to dive deeper into being a contrarian and also sentiment because I love your pinned tweet on Twitter, which is nothing like price to change sentiment. Would you mind kind of elaborating on that thought and kind of explaining your thought process with that?
well, sure. I mean, if everybody is bullish, the theory would be if everybody is bullish, who's left to buy? If everybody's bearish, who's left to sell?
Hmm.
And again, if we go back to late April, well, let me stop there and take you back to early March. In early March, the Investors Intelligence Survey, which I really like, had over 61% bulls. Historically, and this survey dates back to the 60s, that's too bullish. It came down to the low 40s at the end of March. Historically, that's pretty low. Well, not really. I mean, we can get down into the 20s, but for a correction that wasn't even 10%,
Right.
that was a pretty rapid change in sentiment. Okay. What changed? What did we fall? 5%? Everybody in March was dying for a 5% correction so they could buy it. But all of a sudden, now they're not bullish. I don't know. You know, I often say that the stock market is the only place where when stock prices go on sale, everybody goes, oh no. You know, if you were looking to buy a sweater at the store and it went from 100 to 50, you'd be like, yeah. They just don't, in the stock market, people don't do that because money is very emotional. Anyway, now that's back to 59% bulls.
Hmm.
So what happened? The market rallied. So that's why I use sentiment. And I think sentiment is quite bullish up here.
And around that 60 level, is that where you start getting some warning bells kind of?
Right. So now sentiment on its own is no reason to be bearish or bullish.
Hmm.
You need the indicators to turn.
Right.
So I already told you I've got that 10-day moving average of new lows turning up. I've got the new highs faltering. I'm saying faltering, but I bet my 10-day moving average is rolling over there as well. But they're clearly not expanding. And breadth has rolled over. The breadth of the market has been spectacular. 3 weeks ago, it was leading the indexes, making new highs. The indexes weren't making new highs. So now the indexes have caught up because the index movers have gotten going. NVIDIA, Microsoft, you know, all the stocks
big
that
names.
control the index, the
Yeah.
30% that control 30% of the index are moving. Okay, so you've already got an issue with breadth. All that, you know, expanding breadth is not expanding. And then you've got, the IWM didn't make a higher high. And you've got sentiment too bullish. So now you sort of have the legs of the stool. And then the next question is how much selling can you get? Is it just going to be a little dip and then you're back up? Or are we going to get a major bout of selling? Right now, I'm of the mind that it's enough. You should be taking some profits. I haven't seen enough selling, but I see today there's a lot more selling than there has been. And I keep pointing out, like on Twitter, you may see, I've pointed out now, today's the third time in a week, the Dow is down 200 points.
Mm-hmm.
And to me, all the clowns are like, oh, that's no big deal. And it's just 1% or 0.5%, or who cares about the Dow? And I care because go back and look. The Dow was the first index to turn up, and that matters. And I don't care whether you trade the Dow or not. You're looking for signs. You're looking for signs that something has changed in the market. And something has changed in the last week when the Dow has 3 days where it's down 200 points or more.
Yeah, I noticed today I have some charts in DeepView that kind of plot the performance of different theme and sector ETFs, performance from the open. And I'll just show the camera real quick. There's a lot of red down from the open. Those are just theme ETFs, and then up there, trying to point, that's more sectors. So there's definitely some weakness today, and we'll have to see how that plays out. NVIDIA, so for me, one thing I use to measure the health of the market is, key earnings reports. How do they resolve? NVIDIA is still a high of the day for me, but that's one stock too. But I'm using that as a little bit of a market gauge as well, but definitely taking note of kind of the widespread weakness today. So
right, because meanwhile AMD is down.
Right.
So, it's not really a group move if you only have one stock doing it.
Right.
And I mean, I'd have to look at all the other semis. I've been positive on the semis, but like, for example, last night in my newsletter, I said the ADI earnings report was amazing, but you have a measured target of 240, 245. What are you going to do? Hold on? Take something off the table. So that's kind of where I'm at. I do have my eyes on energy.
Mm-hmm.
And I warmed up to energy about a week ago. I thought I was early. Turns out I'm very early. But I'm watching it because I don't know. I have a feeling energy is bottoming here.
Mm-hmm.
And, a month ago, everybody was bullish on energy, and then it came down. And now I can see on Twitter, everybody's like, oh my God, look at energy. It's going to roll over. Look at the head and shoulders top. And again, that's what I watch. So, up at the highs, everybody's bullish on energy. As we've moved down, not so much. Go back to my pinned tweet. Price changes sentiment.
Yeah, and one more thing about sentiment. I wanted to ask you about your polls that you do each week and kind of how you use that as an indicator as well. Would you mind kind of touching on that and how you incorporate that into your process?
Well, I started doing the poll because back in March of 2020, the market was just so wild.
So turbulent. Yeah.
And we were moving hundreds and thousands of points a day. And I thought, well, this would be kind of fun. Everybody's sitting at home. Let's do a poll. What's the next 100 points for the S&P? And I just started doing it every Saturday, and it became a thing. So now I track it. A few things I would point out. Once I get to about 500 votes in my poll, it doesn't change much.
Mm-hmm.
If you, even if it's small, even if it's 5149, it doesn't change much. I mean, maybe you'll go to 5248, but you're not really moving off the mark once you're over 500 votes.
Mm-hmm.
I've noticed that for the most part, my voters, my followers, I guess, are correct. Mm-hmm. In that they're not contrary. But I also notice when the spread gets really small, 5149, 4951, we tend to get much bigger moves. So when they're so confident, you tend to go with them. When they're not as confident and people are like, that's when you tend to get a big volatile move. Doesn't matter which side. It could be, 4852 or 5248. I'm not picking a side. I'm just telling you that when people get less decisive, we tend to get bigger moves.
That's interesting. I might have thought there might be almost an overshoot and kind of pullback in it where, we've been in a trend for a while. Everybody's bullish. It's 60, 60, 39. And then the next week it goes 65, 25 or something a lot more extreme than that. And then that could trigger. It's not like that. That's interesting.
It isn't. I did notice that when we get, I think it was more than 28 on the spread, we'll tend to get very choppy or down.
Mm.
That becomes a little extreme, and we got that kind of a reading. I think it was 2 weeks ago. We got a rather large spread, and interestingly enough, if you take a look, I just cited all those 5308, 5307, 50, you've gone into I don't know what
Choppy
today
trade.
will bring.
Yeah.
I think the S&P is up it's up.
Yeah.
But not by a lot. So we'll see what it brings. But so far, we've mostly been hanging around this 5,300 area from that extreme bullishness.
Yeah, sentiment's really fascinating and something I want to dive deeper into. And I watched a presentation you did for the CMT, I believe, where you talked about the sentiment cycle and how that kind of maps to a stock chart. Are there any kind of key takeaways that you think people watching this, might glean from the sentiment cycle that you think would be important for them to remember?
Well, not so much from the sentiment cycle itself, but I find for myself, and maybe it's helpful for others, that when you yourself are feeling emotional about the market, it's best to take a deep breath and step away.
Yeah.
Okay, so for me, if I'm trading and everything I'm trading is working, I'm about to be wrong because I'm just not that good. I'm just not that good. I should have some bad trades along the way. And if everything I'm doing is in gear and making me money, that's usually a sign we're getting close to the end. And to put that in sentiment terms, if I'm making that much money and I'm like, oh, baby, isn't this nice? I have a button that says, if it looks great, it's too late. And I keep it taped to my screen because I often have to remind myself when all of a sudden I feel like I can't miss, I'm about to miss big time. And that's a sentiment thing. And that's how to sort of control your own emotions, which, are we always successful? Oh my God, I wish I were, but I'm not. So you just try and work with it. In terms of the sentiment cycle, which you can look up. I mean, I've posted it, and, if you want to attach it to this when you send it out, you can. But the thing that I observe about the sentiment cycle is it often takes longer than you anticipate for people to get wildly bullish and wildly bearish. Because just as you think, oh God, they can't get more bullish, they get more bullish. And just as you think, oh, come on, everybody has to have sold, they can't get more, they get more bearish.
Yep.
And so again, that's also in trying to keep your own emotions in check. And the hardest thing about keeping your emotions in check, I find, is, let's say I'm looking for a bottom and I'm getting long and I'm wrong. Do I stop out? I know there's a bottom in here. Do I add? You go through this whole, what do I do? Do I wait for them to turn to add? There's a whole litany of things you go through in your head. But the worst thing is you're losing money. And do you add to a losing trade? And I struggle with that every time.
Yeah.
So I have no answer. But I can tell you that that's when I find, oh, let me go out for a walk, because I'm staring at every single tick and I'm wrong.
Yeah.
And I know based on my indicators and everything I've done, I'm close, but I'm getting more and more anxious as time goes on because I'm watching that P&L and it's going down. So it's emotional.
It's an emotional game for sure. And I definitely echo what you said at the beginning about, when everything's going right, the market's going to find a way to humble you. Like, it's going to bring you back to earth, and it's going to happen a lot faster than you think. Yeah, really, this has been really fantastic. Are there any other parting words or general advice you'd have for traders kind of starting out to kind of help them along their journeys? Of course, you've got your own vast experience. I'm sure you've got some words of wisdoms for everybody for everybody out there.
Oh, don't be like me, learn to ride a trend. I'm too old to learn, so there you have it.
Yep, great. One more time, if there's people who would like to reach out to you or connect with you further, where's the best place that they can do so?
Well, you can find me on Twitter at H Meisler and HMEISLER. Or I write two daily columns. One is on stocks called Top Stocks, and one is just on the market at the Street Pro.
Perfect. Well, Helene, thank you again for your time. I really enjoyed this. We talked a lot some concepts that I haven't really covered in previous conversations. So thank you again for joining me today. To everybody watching, I hope you enjoyed as well. Definitely leave a like down below if you did. Subscribe if you're new to the channel, and we'll see you guys in future videos. Take care.